We're joined by Christin Tuxen. She's a senior analyst at Danske Bank and joins us from Copenhagen. Christin, great to have you with us. Just when we thought gold couldn't get much higher, people are saying, you know, it's likely to go quite a bit higher. What's your focus to it?
Well, I think what we're going to see over the next couple of days is that the yellow metal will still be very much in the hands of the European debt crisis. So unless we get a resolution to this somehow, I think gold could still go higher.
And how high? Are we talking about 1,600, even higher than that?
Yeah, I think we could definitely reach 1,600 if we do not have a resolution to the debt crisis. That is quite certain, because gold is really the only currency, you could say, without any debt strings attached to it.
And there aren't any real currencies to sort of like put your money in either. The Swiss franc is incredibly expensive. Everything else looks a bit wobbly.
Yeah, true. We have seen, well, a major sell-off in most G10 currencies, apart from, of course, to some extent the dollar and also the Swiss franc and the yen, which are the traditional safe havens. So gold is really where commodities, or the kind of commodity that investors would be looking to as an alternative to currencies at the moment.
Well, it's interesting you talk about the dollar because, as we know, gold typically trades counter to the greenback. The dollar appears to be making something of a comeback. In usual circumstances, there may be that inverse relationship, but we are not talking about usual circumstances right now.
No, it's very unusual circumstances at the moment, and we should remember that this is all very much driven by Europe. So the euro is being sold off to a very large extent. It's benefiting the dollar, which is still perceived to some extent in at least a state of emergency as a safe haven, and that is why, well, the dollar is gaining and gold at the same time. So the usual inverse correlation between the two has broken down in recent days and will likely continue to do so over the next couple of days.
Let's take a look at some other metals then that are proving to be interesting. We always seem to relate silver with gold. Quickly on silver, it's always much more volatile market. Where do you see that going? Is there too much supply in the market right now to justify this price?
Well, silver is more volatile because it's a smaller market, so liquidity is lower, and especially right these days where it's a summer market in many ways. So in that sense, I think silver is likely to continue to stay volatile. And also we should not forget that silver has an industrial demand to it as well. So we have seen these fairly upbeat growth numbers from China this morning. Well, that is giving support to industrial metals on a broad base and also to silver from that respect. Yeah,
those interesting figures from China, which showed a little bit of a slowing down in growth, but much better than analysts had been expecting. What do you think the outlook is for those other metals you just mentioned there, notably copper, notably aluminium? Where are they going?
Well, I think we could see a rebound in the second half of the year for industrial metals. We've seen those trade a bit sort of on the, a bit of a summer lull so far. But I think if we recover from this European debt crisis, which is our base case view, well, we are going to see the global economy recover from the soft patch we are in right now. And that will mean that demand will pick up for industrial metals in the second half of the year, and this is going to benefit copper, but also aluminium.
Okay, Christin Tuxen, really great to talk to you live from Copenhagen. Thanks for joining us on Countdown here on Bloomberg today.